So, should we buy or sell the Global E stock? So, first off, read this disclaimer carefully. Then, do your good deed of the day by liking and subscribing. So, I have a theme here under the megatrends called e-commerce broad. So, these are companies that are, more broadly in the e-commerce space. Here is a Global E Online. They are a platform. So 49% here from the 52-week low, minus 72% away from the highs. So definitively seeing what we could call a pullback. So here is the company's website. So smart cross-border. Grow your international sales quickly and simply in more than 200 destinations with Global Ease end-to-end cross-border solutions. So yeah, that's basically their thing. They make it a lot easier to do e-commerce globally, which has been a challenge for a lot of people because there's all kinds of chaos when it comes to taxation, rules, regulations, yada yada yada. So it's very beneficial for companies to have someone like Globally that can take care of those headaches. Here is the chart, weekly data points. So this one, it had a lot of bulls supporting it in 2021, as you can see, a big rally. But we have seen a very protracted bear market for this stock, very substantially, frankly. You can see here that well, that's the wrong color. So let's get the blue color. You could make the case that we are forming a bit of a rounding bottom. Maybe it will become a cup and handle. But anyway, we are seeing some constructive action. The problem for the bulls here is that this purple 20-week moving average is so easy for the bears to use as a short level. They just come back there to put on their shorts and make money, and then they will continue to do it. On the daily data points, let me draw it in, the blue 100-day moving average forms that function for the bears. So they come in here and they short. However, there is a big but, because on the topic of the 20-day moving average here, in purple, you see that it has become a support level. This is where the bulls come here into the stock and buy. So we have a battle now between the bulls and the bears. So this is basically a very interesting situation because there's action here in the stock. Resistance level versus support. Yeah, what I dislike here from a more bullish perspective is that the bears they put on their shorts here on Friday and they really created a bit of an ugly candlestick. You see that this red candlestick just engulfs quite a few bullish days in just one swoop. It's not a disaster, but it's definitively not what the bulls should have allowed to happen. So yeah, a bit dangerous, but the bulls, they still can pull off something here. Looking here at the MACD weeklies, strong buy signal. Looking at RSI, we have approached a level that could become breakout, meaning higher level and a sign of strength. Simultaneously, this is a fail level for the bulls. Looking at the daily data points, so the bulls have been able to create some higher levels here on RSI and some of the PPOs. Looking at accumulation distribution, we do have some pretty substantial bullish action here. So there are definitively buyers. So I give the bears a -1 here on the technicals. So it is slightly more bearish than bullish, but I do like what I see with the 20 daily moving average support level. So basically, yeah, there's a war now between 100 daily moving average support. Well, no, 100 daily moving average resistance. Resistance versus 20 daily moving average support. So this stock recently went public, so we don't get any seasonality data here to the right. To the left, we only really have 1 year of data. July and August close higher 100% of the time. On average, the gains are pretty substantial, but we need to be very careful about jumping to any kind of conclusions when we have this little data. That is why, even though the data is very bullish, I only give the bulls a 1 here on seasonality. We simply do not have enough data to jump to any kind of conclusion, bullish or bearish. Let's look at the fundamentals. So here is SAX, a number 5 strong sell, F value score, but there is a C growth score. So there is growth here. The momentum VGM of F industry rank top 39% internet commerce. Market cap is 3.6 billion US dollars. There's no dividend. Insider activity, nothing to report. Looking at the consensus estimates, so we do see that 9 analysts are covering the stock. Average price target is 31% above us. Highest is 76% above, and the lowest price target is 7.20% above us. So the SAX rank was very bad. Then again, it can't at least be downgraded. The style scores, so there's no value here, but there is actually some growth. The price targets are interesting, so I do give the bulls a 3 here on the fundamentals. We do not get any correlations on the weekly data points. Looking here at the dailies, so we do see that there's an 86% positive correlation with the S&P 500, 89% with the XLI, consumer discretionary ETF, 91% with XRT, the retail ETF, then 95% with the online retail ETF iBuy. So what happens with the iBuy ETF is going to have the biggest impact on global iBuy, like that. So let's look at the charts here. So the interesting thing here is that we have seen a very substantial sell-off for this ETF. However, if you look at the last 6 weeks, because these are weekly data points, we are seeing a low forming. So this is interesting. This is also forming a bit of a double-ish bottom pattern like this and like that. Yeah, so this is just more interesting from a bullish than a bearish perspective. It was very interesting from a bearish perspective back here in February of 2021, but we have already seen a massive repricing of this ETF, this industry. The thing is that looking long term, I'm definitely bullish on online retail. When it comes to double bull bottoms, they have actually worked out before. So this is not a textbook double bottom in the sense that the right end of the bottom is lower than the left. Then again, the algorithms that trade and also people will look at this and be, intrigued by the potentiality of a double bottom. This double bottom did work out, so yeah, I think this is definitively more bullish than bearish. Here I am comparing the GLBE stock with the iBuy ETF. So I do see an interesting potential pattern developing, and that is an inverse head and shoulders pattern. That is a bullish technical pattern. The problem with an inverse head and shoulder in this case is that we might then go a bit lower in order to form that right shoulder if we are going to develop that pattern. That means that globally might underperform the online retail ETF. But that is purely based on that pattern projection. So let's look at, we don't get any seasonality. So yeah. Here I am comparing the online retail ETF with the S&P 500. We have seen many different things. Here it monstrously outperformed the S&P 500 only to completely lose it all. But we have fallen to an extremely low level. Throughout the history of this ETF, well, this pair, the online retail space has outperformed the S&P 500. So the average data here suggests that we could see some upside, and we are emerging from a super low level historically. Looking at the dailies here, we do see that we have gone from low to now moving sideways. So there is definitively this consolidation pattern that's developed, as you can see. That's interesting. So we've gone from bearish to a bit of a standoff. Now let's look at the seasonality. Yeah, so over the last 5 years here in green, we usually see a little bit strength from online retail, but then massive underperformance, really heading all the way into the 17th of October. That is definitively not bullish. The thing is that there were some very interesting developments when it came to the online retail ETF, which, along with other stuff, I give the bulls a 4 here on relative performance. So the context here is pretty interesting for the GLBE online stock. We do have a 1.8 here in favor of the bulls, but we do have this quirky situation where there's a war between two different moving averages. On the one hand, the bears love the 100 daily moving average resistance level because it's such an easy place to put in short positions and make money. But the bulls have been able to turn the 20 daily moving average into a clear support level. So it's a messy setup. But overall, the data is a bit more bullish than bearish. I see that we have some time left, so let's look at some e-commerce stocks. So here is Wix, that's also an e-commerce platform. Could potentially be some, double bottomish formation here. Here you have a bottom, potentially this. Definitively seeing a massive sell-off. Looking here on the dailies, yeah, we do have something that is it's a bit rounding bottomish in the development here for Wix. So yeah, I have also Wix on your radar. Let's look at Shopify. So Shopify, yeah, also massive sell-off, but now we have seen for a few weeks that so there's a more even tug of war here between the bulls and the bears. So this is interesting from a bit more of a bullish perspective, but to be perfectly clear, the bulls have a lot to prove. Let's look at the king of online retail, and that is Amazon. Yeah, so Amazon, they lost the red 200 week moving average in red. It has now become a resistance level. On the daily data points here, we see that, so let me just draw it in. So you see here that the bulls, they tried to break out above this prior resistance level. To get above that would be, psychologically very important for the bulls. But we did see that some selling came in at that level. So yeah, what the bulls basically need to do is to buy above that resistance level, not sell. Yeah, that is basically how it works. Because the issue with that level is that it's very easy for the bears to put on short positions at that level currently. But if we do see a bit of an aggressive action above that resistance, then the short sellers will be spooked. Here is Carvana. They are in the e-commerce business, but for cars. Here also you have a bit of a double bottomish pattern. We have gone from just pure selling to now the stock is moving more sideways. The green 50-day moving average here was a resistance level, easy to short. Now the bulls are dabbling a bit above it. And you see here how the other moving averages have just absolutely gotten entangled together. So also here, there's a change in the air. Is it roaringly bullish? No, but it is becoming more bullish. It's becoming more dangerous here to be a bear, and that is what the bulls need to happen. They need to really scare the bears in order to form a key longer-term low. Let's quickly look at the S&P 500 because it is, the most important stock market index. So we have had, quite a few weeks now of, bulls pushing us a bit higher. So there's something interesting in development. Yeah, let's look here at these other indicators. So in terms of the RSI and also the purple 20-day moving average PPO, We have gotten into a bit of a dangerous territory. We did have this counter trend rally here in early June. It failed at the level we are currently at, which basically means that in order for us to basically get a new major uptrend, this is when the bulls need to really push. Because if they start to, freak out a bit early next week, then the bears will just call their bluff. But if the bulls really start to push, that is when the bears really will get spooked and will cover their shorts. And that is how, major lows are formed and you can get those very aggressive rallies. But yeah, it is definitively to be determined.